Hey YouTube family, it's Denko the Realtor, your Utah Realtor. Is the housing market going to skyrocket in home prices? Is everything going to be selling? And I'm going to show you that that is not the case. I'm going to get the fear out because I don't want you making decisions based on fear, but decisions actually based on data and information that you have available to yourself. What I'm going to show you is how much sales have fallen off a cliff. We're going to be dissecting this. You know I'm going to have the data. So I'm going to show you 2019, 2020, 21, 22, and 23. So stay tuned and I'm going to show you, what could happen with that recession and as far as the great housing correction. So if we take a look at this, in 2019, there was 47,721 units that were sold. And if we go to 2020, we see that that was 52,422. So that was a net gain of 4,700. So in the year 2020, we had 5,700 more units, more homes sell than we did in 2019. But stay tuned and see what happens in 2022 and 2023. So if we go to 2021, right, that's when everything started going crazy. Yet, look at this. There was less sales in 2021 than there was in 2020. And it was only 1,389 units more than we did in 2020. So how was it that home prices started exploding in 2021 and not in 2020? Well, it's because of inventory. Remember, the wood mill stopped producing wood. That people stopped selling their houses because they were scared for people to come through the home because of COVID, and there was a short supply. And I went through this in previous years. We don't have that pandemic shortage. We have the same amount of homes available on the market as we did in 2019, the last pre-pandemic year. So that pandemic shortage is gone. Now, what happens if we take a look at 2022? Oh my gosh, look at that. So the first half of 2022 was actually crazier than the first half of 2021. Home prices actually exploded at a higher percentage. Why? Because we had less inventory than we did in January of 2021. So the inventory to start the year in 2022 was even lower. It was like 1,900. And last year and this year, we have pretty much almost 8,000 units. So you see, that's quite a difference, and that's resembling 2019 levels, but not the 2019 demand. And if you've been paying attention to the videos, you know what's going on here, that the sales are down, that the inventory is going up, and that when we're comparing the inventory, it's the same in 2019, yet the sales are way down compared to 2019. We're like 35 to 40% down with sales when we're comparing each month year over year from 2019 to 2023. And now, of course, we're in 2024 and sales are not picking up yet either. So if we take a look at this, 8,000 units less in 2022 sold. And then remember, the second half of 2022, home prices just started plummeting down and they fell upwards of 15%. We went from a median price of 600,000 to 510,000. So from May of 2022 to January of 2023, we went from 600,000 to 510,000 on the median price. And then, of course, we had that small uptick, which we potentially could have here as well if we don't see that recession, if unemployment rate does stay low. We're going to have maybe a small uptick, nothing major, in the spring. And then in the summertime, it's going to start kind of balancing out. And then prices are going to start dropping again as the school year approaches, as fall comes, and as the holidays come. That's kind of been the trend the last 2 years. Now, if we see the recession, and I'm going to show you some graphs about that here, but let's take a look at 2023. Wow, look at that. 13,457 less homes sold in 2023 compared to 2019, the last pre-pandemic year. Yet, everybody's trying to tell you that, oh my gosh, home prices are going to explode. You better get into the house right now because, hey, when interest rates do fall, everybody's going to be buying. Well, look at this. Interest rates to start the year off are actually higher than they were at the beginning of 2023. And on the previous video, I showed you that mortgage applications are down compared to the same time last year. And again, remember, that was not a good time of last year. That was 2023 January. That's when the market bottomed out. And when we compare that to January of 2022, mortgage applications were down 20-something%. So really, we are down 30%, around 30% compared to 2022, right? January in 2022. And the interest rates are not coming down because inflation is being sticky. Now, I'm going to show you some graphs, but before I do that, What's going on with the car market? It resembles the 08-09 housing market. Subprime mortgages, subprime car loans. Cars are not an appreciating asset. They exploded during the pandemic. There's more people underwater under cars than pretty much ever before. The repos are at an all-time high. You can literally go and Google it, and the defaults right now are higher than they were prior any time of 08-09. So what happens if unemployment goes to 6-7%? I mean, it would be Armageddon on the housing, on the cars, the car loans, and the car loans could resemble the 08-09 housing market. And then houses have just exploded up in price. Commercial real estate, they're saying, is going to be hit just as hard as 08-09 potentially. And then we have tech companies where only 5%, I've went over this in previous videos, 5% of tech companies that make $1 billion or more, valued at $1 billion or more, are actually profitable. So they've never been profitable. They've never been through a recession. What happens with higher interest rates, with higher unemployment, and what happens in a recession to these tech companies that were not able to turn a profit with all the money that was being printed after the 08-09 crisis, right? So enough of that. So we see here, interest rates are higher to start the year off. Now, I want to show y'all, look at this chart right here. This is San Francisco. So if we take a look at 08-09, right, it looks like things were stabilizing, then it went up, they went down, and it looks like things were stabilizing, and they fell down. This is not an overnight thing. If we do see that great housing correction, which we potentially could, and I am leaning on the recession. The only thing is the US government has been printing more and more money. Every single, administration that gets into the presidency since 2000 has just printed more and more money than the previous one. And it's just kept happening. I mean, since the 2000s, we've just printed an enormous amount of money. And anyway, so if we take a look at this, what could potentially happen? Look at Seattle, right? Seattle went up, down, then it looked like it stabilized and it kept going down for much longer. It didn't fall as quickly as San Francisco. Now, if we go over to San Diego had a little, stabilization period, and then it just fell down. Now look at these markets. Well, that's Los Angeles, but I want to actually go to, and this was, Denver's going to resemble kind of where we were at in the early, 2000s. Salt Lake was just like this. So people say, oh, we have so much more equity. It's not an issue. Well, actually, when your prices just skyrocket up, the fall down is actually potentially worse, as the graphs show here. So if that does happen. Now, if you take a look at Portland, same thing. Look how much it was stabilizing over the years. And I want to get down to Phoenix and Las Vegas. So remember, those were the two hot towns during 08-09. Those were the ones that had no logic of why they exploded up. Just kind of like the pandemic, right? Well, look how much quickly Phoenix fell down, right? Phoenix was the worst. Their whole economy was dependent on the housing market. And then look at Las Vegas too, right? It looks like things were stabilizing, then it just kind of starts coming down. But look at Phoenix, right? This plummeting down, right? Things are stabilizing here for this year and a half, and then all of a sudden it just starts falling. So the thing is, the economy hasn't settled. The housing market hasn't settled. Nothing in the economy has fully settled. And the US government printing amount of money hasn't settled either. And I don't know when that's going to settle. And of course, there's this whole crypto thing. There's this attack on the US dollar. What if we do default on our debt and money becomes worthless and we would have inflation skyrocket? That's the thing. We've never been in a scenario where we're in right now, right? There's all this crypto stuff. There's a digital dollar that the Fed is supposedly working on. And we have to look at the information, but we know one thing for sure. Mortgage applications are not trending upwards. Interest rates so far are not trending downwards. And the amount of people buying these homes is not trending upwards. So until these things change, we know that the housing market is not skyrocketing up. And the other thing we would have to have happen is the inventory would have to just plummet like it did in January of 2021 and January of 2022, which would take some COVID-like scenario, and I don't see what would happen unless World War III happens, of course, right? So that's why we have to mimic or see what's mimicking previous, crashes. Of course, the dot-com bubble, which we didn't have in 08-09 because of the dot-com bubble in 2000. Now we have a tech bubble as well. So there's a lot of things that are brewing. That's why don't be, that fear of missing out. Look at the data. We can go out there. I've been helping people get the best deals possible. I've been negotiating. Even when a house in a desirable area hits the market, I'm still dropping prices on it. And when houses are on the market for 80 days or 100 days, you're able to drop that price even more, or you find a builder. So as long as you don't get attached to that one house and you pick a few that you like, you're able to get that good deal, right? But look, figure out, what do you want to do? Do you want to wait for this recession to see how this recession is going to pan out, if they're going to be able to print money, and if this thing is going to just kind of be the new normal? Or if it's not, right, you want to kind of wait. And if you do think it's going to be that new normal, then maybe you want to take advantage of it depending on what your scenarios are. Look, I'm going to be selling real estate for decades from today, for, 10 years, 20 years. So I don't care when you buy. I'm going to help you whenever you're ready. If that's today, tomorrow, next year, the year after, whenever it is. I just want you to have the information that you need so that you're not making decisions based on fear, but actually take a deep breath, relax, sit back, and see what would be the best decision for you, your family, your future, and make that decision. Life doesn't give us what we want. It gives us options, and we have to make the decision we feel that is the best for us based on those options that are available to us. These videos will keep coming, and remember, Denko the Realtor in Utah has your back.